Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, are you looking to expand and grow your business? Are you looking for that edge, that next step up, that paradigm shift? Well, one of the best ways to get you there is through a mentor or a coach. And today's sponsor, Trevor McGregor, he is the man. He is going to get you to be laser focused, to get you onto that next level. And I know from experience dealing with Trevor, he is a master coach, peak performance coach, well over 10,000 coaching hours through clients all over the world. And he helps you achieve better health, more wealth and freedom and contribution than you ever thought possible. Have that coach that holds your feet to the fire. Go on to Trevor's website, coachwithtrevor.com. Again, it's coachwithtrevor.com. And there you can get a free strategy session with Trevor. And you can decide if he's the right fit for you and you're the right fit for him. Again, it's coachwithtrevor.com. You will not be disappointed. Hello and welcome to Pillars of Wealth Creation. I'm your host, Todd Dexheimer, and we have another Hump Day hustle. With me is John Stiles with Bridge Realty. John, how are you doing?
I'm doing great, Todd. It is a great day to be alive.
Absolutely. I'm excited here. We're going to be doing an apartment series. So we're going to be talking about, how do you buy an apartment from start to finish? What are the different strategies? How do you set up your goals from the first part? And really, how do you get that apartment business off the ground, whether you're going to be passive or active or a combination. And we're going to kind of dive into as much detail as we can. And we're going to accept questions. So if anybody has questions, go on to our Facebook page and ask a question too. We'll try to answer any questions that come up. But hopefully give everybody a real good understanding of the intricacies inside apartment buildings and how to buy them, what to look out for, all that kind of stuff. So.
Yeah, that sounds really great, Todd. So I'm glad to be on this with you because I personally, I'm involved in real estate and I want to own apartment buildings, but I haven't quite made my first apartment purchase. So I'm really excited to be on this call with you. If I can just ask you, for somebody that is out there considering this as well, and they want to get into investing, they like the idea of real estate. Why would they choose apartments versus another asset class, maybe other residential investments or other commercial investments? Why do you think apartments is a good way to go?
Yeah, good question. And, I don't think there's really a right or wrong way, by the way. I mean, some people preach like their way is the best way. And to me, that's not necessarily accurate. It's what's going to make you tick and what's your goal? So I think first you've got to look at what is your true goal, right? And so if your goal in real estate is for financial freedom and you want to get there as quick as you can and you've got your number set, then you have to look at, okay, what's going to get me there? And there's a lot of different avenues. I know some very successful commercial real estate investors who are buying retail and office and stuff like that. And they do really well for themselves. And so not necessarily that's a bad thing. I know plenty of investors that buy single family houses and they keep those for rentals and they do really good for themselves. And I've done really good doing that. So there's no right or wrong answer, but I think apartment buildings, at least for me, it's going to get me to where I want to be a lot quicker. And when, as I look at my business and where I've been and where I want to be, single family rentals are okay. And I'll relate it to single family because that's what I've done a lot of. Okay. So I've done a lot of 1 to 4 unit buildings and it just is going to take a long time to get where I want to be. I've got about 50 of them and 50 properties gets me, $100,000 of income after paying mortgages and all that kind of stuff. And if you buy one apartment building though, you can quickly be with just one deal, you can be at $100,000 of income. So That's
So, Todd,
the biggest difference in my mind. Yeah, go ahead.
yeah, I'm sorry. For those 50 approximately other buildings, smaller buildings, how long did you take to acquire that and that many compared to buying just one building?
Yeah, and that's another great point. So that's kind of, and that is my point, is it's going to take you a lot. That scalability just isn't there for single families and for even small commercial. So I started buying in 2008. It was my very first rental property, and granted, I didn't have a lot of money, so it was a great way for me to get started. And again, I don't want to poo-poo anybody for getting started that way, because that in my mind is not a terrible way. Now, actually, I don't like single families anymore. I would rather see you buy a fourplex or a 5-unit or 10-unit to start. But yeah, so I started in 2008, and the last rental, small rental, 1 to 4 unit building that I bought was in 2014, I believe, was the last small rental property I bought. So from 2008 to 2014, I was buying a lot of 1 to 4 unit buildings.
Okay.
Yeah. And the problem, so the difference between apartment and the 1 to 4 is really, it's the efficiency and that scalability. With single families, it's very hard to be efficient. It's very hard to scale. You typically have a really hard time to buy them all in the same exact neighborhood. And if you can, well, it's probably going to take you a long time to get there. And it's really hard to hire management companies and to really make it work properly for you. So unless you're going to live right next to your rentals, you've got to travel all the way over to them when a problem happens, or you got to be a lot more hands-on, which, is good or bad depending on who you are. So it's really about your goals, though. So
Yeah. And I'd like to comment on that. I hear a lot of people saying that you can't get management for smaller buildings or units. And I always struggled with that because if you don't recall or don't know, so I used to be a full-time property manager from about 2010 to 2014, 15. And we specialized in 1 to 4 unit buildings. So that was, I was like, why can't I do this? I'm doing it. But I do admit, we obviously couldn't get to each of our rental units all the time. We had to, the time between visits could be quite lengthy, just depending on what's going on and depending on how far the property was from our office. So you definitely don't get as much, supervision of the properties when they're spread out like that.
Yeah. I didn't want to make it sound like you can't have third party, because you can, but the numbers cuts into your overall profit a lot. Right. So when you look at a single family, a lot of people want to buy single families, and they're going to make $150 to $250 a month on them, which is okay. But if you then hire a property management company, now let's say you're making $250. Now your $250 goes down to whatever they're charging, let's say $150. Plus you've got your lease out fees, and you've got other fees that sometimes come in there. So it goes down even farther. So now you have an eviction or a vacancy or whatever, your 150 turns into negative really quickly. And that's where it's more difficult. Not necessarily that it can't be done. You have to really be in tune to your numbers on your acquisition to make sure you've got that big fluff there. So the other thing that I would have to say, and this goes to actually even like 20 unit, 30 unit, even 40, 50 unit buildings, is you don't have that on-site management presence, which I think is a really big advantage to what I'll call mid to large multifamily. And that starts at about 75 units, where you can have some part-time on-site staff. 60 units, you could have some part-time. it would work a lot better if you had like a 60 unit building, maybe another 50, 60 unit building within a mile. That would work really well, because then you could get a full-time staff.
Yeah.
So that's a big efficiency jump, is when you can get that management on site, and you have that leasing agent, you have that maintenance person, and then the building is being cared for on a day-to-day. And it's so much easier to avoid problems. Fairly recently, I had a tenant that ditched out, didn't tell me, and shut the heat off middle of winter. Luckily, my pipes didn't freeze because we caught it in time. But that's just the risk on a single family, is that you're not there. You're not as a tenant a lot of times.
Yep. And one of the biggest costs when you do hire a third-party manager is not necessarily the management fee, but the maintenance cost, because oftentimes they're outsourcing to licensed contractors. They have to use reputable repairmen in order to keep their reputation up. So those prices are not going to always be very cheap.
Right.
And then, of course, there's travel time to get to the property and diagnose the issues. But if you have an on-site maintenance guy who can just pop by and, maybe he's got some supplies in the building, I don't know.
Either way, he's already on site. You're paying him on a full-time basis anyway. Whether he has the capabilities of repairing that or not, it doesn't cost you any extra for him to go look at it, right? So he or she goes to look at it, checks it out, says this is the problem. They've diagnosed it. They say, I can't fix it. You're going to have to hire a plumber or a HVAC person or whatever. And there's already that work order written up. We know what's happening. That HVAC person knows that they've got to replace the board and comes in and just does it. And you don't have to pay that service charge that you would otherwise have to pay, and lose that time that can be very valuable, especially in a Minnesota winter. So, yeah.
One of the drawbacks still with residential, whether it's small or large, is you still have lots of tenants, toilets, and trash. Those are the 3 T's that people don't like.
Yep.
And so do you feel like there's still benefits that overcome those with choosing apartments versus, retail or something like that?
Yeah. There's different pros and cons between retail and apartments, and retail is definitely going to have less of the tenants, toilets, trash. You still have tenants, you still have toilets, you still have trash. And if you've got bad tenants, you still have major problems. With commercial, I'd say one of the bigger disadvantages with commercial is if you have a tenant that's not paying, they could be one of your main anchor tenants, one of your major income sources. If they don't pay your rent and you have to get rid of them, it's going to take a while to get rid of them, and it could take a long time to get somebody else to take their place. Think about when a company goes bankrupt. Toys R Us is, I think officially they've gone bankrupt, or they're going bankrupt, whatever it is, but they're going to be moving out of all their places, and they're an anchor tenant in a lot of retail shops. So now you got to replace a big company like Toys R Us. Think of when Kmart's out of almost everywhere. I can't even think of where a Kmart is. I'm sure there's a few around, but
there's one on Lake Street.
There you go. There's a couple left, but they used to be everywhere. I mean, you'd go into every major center, and that was a big anchor, was Kmart. And now you got to replace Kmart. And so as you have a big anchor tenant, and I don't care, they sign a 30-year lease, that looks good on paper, but it doesn't matter if they go bankrupt, they're gone, right? And so that's one of the biggest risks to me with retail, is if you've got a center, especially a retail center, and you've got a big anchor tenant, they go away, that could take you under right there, just with that one tenant. Or residential, if you've got a 200-unit apartment building and you've got one tenant that leaves, even if they're renting the biggest unit in your apartment complex, let's say a 4-bedroom and the rest are 1s, they're not going to take you down. So that's a huge difference. But obviously with that, you're also dealing with, typically, not always, but typically you're dealing with professionals, you're dealing with companies, you're dealing with non-emotional people, if there is such a thing. You're dealing with less emotions, I guess, than you are with the residential property. So there's pros, there's cons. A commercial guy is going to come on here and tell you a lot more pros than what I can tell them about commercial, but and they're going to tell you more cons about apartments. So good and bad, I would suggest studying both.
Right. And I know there's lots of great things about retail, especially if you can get into like the triple net lease type of thing. And we don't want to go too deep into that, I know. But right now, retail is going through a big shift with everything going online. And so unless you really kind of understand that niche and that market, that you might not want to start there.
Yeah, absolutely. Absolutely right. I mean, there's, you've got the big A, right? Amazon, and they're making the big waves in the retail market. And so to me, one of the biggest strategies that you can do as a retail person is, if you're going to buy a shopping center, let's say a shopping center with quite a few vacancies, if you can fill those vacancies with a good amount of service industry, that's very important. If we can get chiropractors in there, or doctors or dentists, or service industry, where Amazon's not going to have a chiropractor, right? They're not going to mail a guy in a box to come out and crack your back. It's not going to happen. Well, at least yet they haven't. Maybe there's going to be a robot soon to do that. I don't know. But those service centers aren't going away, in my mind, anytime soon. So if you can fill a lot of that space with service, complement it with some retail, I think that's a really good strategy. It's just, can you get enough? Is it the right location? So that's what you really got to look for. Is it the right location? Are people going to want to have a service business to you? Because service businesses need traffic just like retail businesses. And so you've got to be in the right spot with the right visibility. And that doesn't already, you got to really look for in retail. I think that's more important in retail is to look for what's around your area and what's lacking, and can you get those types of businesses in there? And not even necessarily what's lacking, but is there one, let's say Starbucks, and there's no other coffee shops around, and that one Starbucks is super busy. Well, that if you've got a retail center really close by and it's got a good setup for a Caribou or a competitor of Starbucks, that's a really good business to get in, right? And they're going to really help be your anchor tenant, because that's great competition. People are already going to Starbucks. They're mad with the long line, so they come over to your place. And so that's another, thing that you got to really look for with office and retail is, what's your competition? And, it's different analyzing those deals. But.
Okay. So we've gone over a little bit of why apartment buildings are a good asset class to focus on. So if somebody's then decided that's what they want to pursue, what is a good kind of starting place, or what are a couple different ways to get into it?
Yeah, I mean, there's tons of ways, right? So obviously the first starting place is you got to get yourself educated. You've got to learn about the business. So if you go, hey, I want apartment buildings, then start learning. And I would suggest a couple books. And John, can we link books on show notes, or at least reference them?
We'll put a link to Amazon.
we can at least put them in show notes, or maybe I'll put them in our blog article. That way they're there for people. But David Lindahl, he's a good author who has a couple of good books. Multifamily Millions is the one that I suggest for beginners. There's another book two books by Ken McElroy, The ABCs of Real Estate Investing, and then The Advanced ABCs of Real Estate Investing. Those are great books. Those are the I guess the three main books that I read to get myself educated. There's of course, then there's web pages like Bigger Pockets that's got a lot of valuable information, almost too much information. So you've got to learn how to navigate the site. It takes a while. When I first got onto that site, I was so overwhelmed. I actually just shut it down and didn't even go back on it for several months because there's too much stuff to even think about. And so you've got to figure out how to navigate that site. There's of course YouTube, there's different podcasts like mine. So yeah, get yourself educated first. That would be number one. So once you actually feel like you're educated, then you've got to decide what do you want to do? What's your goal? So are you the one that's going to be buying the buildings? Are you going to buy them on your own? Do you have enough cash to buy them on your own? And what size buildings, what class, and we'll go into details probably in all of that later. But you've got to decide, where do you want to go? I would start all the way back to what's my destination, right? Not just I want to buy a 100-unit apartment building. I want 5 of them, 500 units done. Okay, well, what does that really mean? What's that look like? So first start of where do you want to be? Where's this going to take you? And then you go, okay, so this is what I want my net worth to be. This is what I want my income to be. Now, what do I need to do to get there? And I think most people will see it's actually less than what you think, and it's actually going to be easier than what you first expected. So figure that out and then decide, okay, so am I going to buy them on my own? Buying buildings on your own. And when I talk apartment buildings, by the way, John, I'm talking $1 million+ buildings. I'm talking, probably 25 plus units minimum. I'll call it 20 plus minimum. But $1 million buildings is kind of my definition of an apartment building, 20 plus unit. So if you're going to buy it on your own, you've got to have enough cash for that. So if you're going to buy $1 million building, you need at least $200,000 to buy it just for the down payment. Then you've got your closing costs, you've got your reserve account, you've got your operating costs from the beginning. So you're probably looking at wanting at least $300,000 just to buy that building minimum. So most people don't have that. So then they're going to have to do it a different way. And that would be partnering with someone or several people, syndicating, joining a syndication, all that kind of stuff. So let's talk a little bit about, partnering. And when we partner with people, again, I think it's really important. John, have you had any partners on any of your stuff?
I've not.
So I think it's really important when you partner with people that you partner with like-minded people. At least you guys don't necessarily have to have the exact same thought process, but you should have a very similar vision, and you should have a very similar, end goal of what you want to do. And the beautiful thing about real estate is you can partner on one deal at a time. So you and I could partner on a deal, and we maybe never partner again. That's just the only deal we partner on. And that could be just fine. But the cool part about it is I could partner with you on one deal. I could partner with, another person on another deal, and 2 other people on another deal. And as long as your goals are aligning, even if you and I fight and want to strangle each other, it's just on that one building. We can sell that building and move on, right? And if we set the process up in the first place the right way, it's a lot easier to do. So suggestion would be to have attorneys involved and really set it up right and think about, what's your breakup agreement and all that kind of stuff.
Yep. I haven't put together any partnerships before. It is kind of difficult to find that right person because you gotta get along, and you gotta kind of have some core values that align, and some common goals as far as getting into the same type of deal. So
yeah, Yeah. And well, here's what I would suggest. Anybody that's going to partner with somebody, partner on a deal or maybe two deals and set it up like that, especially with real estate, set it up like that. And if you like each other and you keep on wanting to work with each other, then you can continue doing deals together and partnering with each other. But to me, that's just the easiest way to do it versus, hey, we're going to form a partnership. We're going to buy a bunch of real estate. Because then you're tied in, right? Yep. So,
yeah, but I do know just from working with different people in different ways that it really is important to kind of figure out what are your different strengths, what are you bringing to the table, what value are you bringing in, and what are your weaknesses, so that everybody's aware of that up front.
Yeah.
So we can complement each other and such.
Yeah, absolutely. And we'll go into all this stuff in more detail as we go here. This is just like first step. So I'm going to run through a couple more ways to get involved. One way would be to syndicate, right? So if you're going to be the syndicate, the sponsor, and this is what I do right now. You find the building, you locate it, you're analyzing it, and then you're presenting it to a group of people, maybe 10 people, maybe 20 people, who knows, and you're raising the money for that syndication. So you can get a fee for raising that money. You're going to get an extra part of the equity. Typically, you're going to put some of your own money into the deal. You don't have to, depending on your relationship with your investors, but that's a way to do it. So you get investors into a deal, that you're putting together, you're operating, you're managing, all that kind of stuff. That's a fairly high level strategy. So I would suggest that for people that have experience, not just as a beginner. I think that's a little dangerous as a beginner to get started that way. Either have a partner that's done multifamily or, whatever, but some sort of experience, definitely. Yep. But that's a good way. Go ahead.
The reason that using the word dangerous, I think I know the answer to this, is because you're becoming responsible for other people's money and their investments.
Yeah, you hit it right on the head. I mean, think of it, if somebody gives you $150,000 or $100,000 or even $50,000, that's a lot of money. And now you're responsible for that money. So if you don't know what you're doing, to me, you're just playing with fire. You're looking to get sued. And the other thing is, even if you don't get sued, do you really want to lose somebody else's money or risk losing somebody else's money because likely you're selling yourself as being this, being somebody who can handle this. And if you really, don't have the experience, how do you know you can handle it? So I just think when you're dealing with other people's money, at least for me, I deal with it more, I don't know what the right term was, but more carefully than I do with my own money. I mean, you just don't want to lose other people's money, right? So I think you got to be careful when you're being that sponsor, when you're syndicating, you just got to make sure you're doing it right. So then the fourth way is to raise money for a syndication. So if you know people or you have money and people that have money, that's a great way to get into multifamily, is to raise money for a syndication company. So if somebody's buying a 100-unit apartment building and you want to get in on that, you can bring a bunch of people to that deal. Now there's a lot of rules behind that. You can't just bring the money in without being a broker, right? So you have to partner with that.
What kind of broker are you referring to?
I can't even think of the actual name, but yeah, right. If you don't have a license to raise money to bring money into a deal, you can't just do it and then get paid for it. You could do it for free, not get paid. But the other way to do it is, John, like if you had a bunch of rich people that you knew or people that wanted to invest in real estate, you could come into one of my deals and you could bring those people in. But I couldn't just say, hey, John, bring me those deals. I'll give you a check. That doesn't work. That's actually not legal. Right. So, but what I can do is we can work an agreement out and a structure out where, John, you're more involved than just that. You're going to be dealing with those investors on a day-to-day basis, or you're going to be emailing them, communicating with them. You're going to help me analyze this deal. You're going to be involved in this. So I can bring you into the company as a general partner to help pay you. And a lot of companies will do that. You just have to do it the right way, so you're not violating the SEC, basically. Yeah. So if you want to do that, I would do some research on how to do it. I would talk to several companies about, what would that look like, and see if it's right for you. Worst case, you bring those investors in the deal. You don't get paid, but you get experience. But I think there's a lot of companies that would figure out a way to pay you and do it legally. So, of course, then there's investing your own money into syndication. If you've got your own money, you can invest in syndication. What I would say to that is find ways to get involved, though. If you really, unless you just want to be a passive apartment investor, if that's all you want to do is to be completely passive, well, then just invest your money in a syndication, crowdfund, whatever. Otherwise, try to find ways to be involved with that sponsor. Try to find ways to really be able to get in there and dig in and figure out what they're doing, how they're doing it. But I think it's cool because you get to see how the syndication company is running things, and you get to see their spreadsheets. You get to see how they communicate with investors, all that kind of stuff. So that's definitely good experience. But again, try to be involved as much as you can if you want to eventually do it on your own.
Yep.
The other thing is being a bird dog. I think this is a huge one for a lot of people. If you go and find an apartment building, you can get paid, maybe up to $50,000. You find me the right apartment building, I'm willing to pay you a pretty good chunk of money, or I'm willing to get you in on that deal as kind of part of that finder's fee, that's what I would suggest the most, is trying to get, part of the deal.
Yeah. Now, as a bird dog, doesn't somebody need to be a licensed real estate agent to be paid basically a referral fee or a commission in that?
That would definitely be the easiest way to go do it. There's definitely other ways. I mean, there's wholesalers out there, right? That aren't agents. So there are other ways to do it, but that's for sure the easiest way to do it.
Okay.
But
and wholesaling, just briefly, is putting the property under contract as if you're going to buy it, but then assigning your interest in it to the end buyer.
Yeah, or closing on it and then reselling it. Yeah.
Yep.
If you're going to do it, if you're not a real estate agent and you're going to bird dog and you're going to get paid for it, again, I would run that by an attorney to make sure you're doing it the right way.
Yep.
Because you want to get paid, right, for what you're doing. So make sure you just do it legally.
Mm-hmm.
What else? We could volunteer, right? Or even get paid to work with an investor. So, whatever your skills are, you could add value to apartment investor to help learn from them in exchange. So, and that there's tons of ways. So just connect with real estate investors. Next thing is start small. And this is kind of what I did. I started buying 1 to 4 unit properties, completing flips, doing all that kind of stuff, started small and then go up. What I would say is just don't wait too long, right? Go into, if apartments are what you want to do, go into them as quickly as you can. What else, John?
I'd like to just use myself as an example. Many years ago, I became interested in real estate, but I didn't have any real personal connections. I didn't have any really good knowledge. I picked up a few books, but I'm not a really big reader. So I got it in my mind that, one way I could start is just to manage other people's rental properties and get involved that way. So I actually just started my own company, and then found out after the fact, actually in our state, in Minnesota at least, and probably most other states, you have to be a licensed agent to be a property manager for other people's properties. And so then I decided to go ahead and get my real estate license. And so that's how I mentioned earlier, I was a full-time property manager for many years, and I learned, quite a bit, just tenant relations, the accounting side of things, maintenance management, all the little details about how to manage a rental property. And that has really set me up well, I think, to take the next step soon. So
Yeah, cool. I mean, that's a great point. I mean, become a property manager, become a real estate agent, especially if you can become a commercial real estate agent, become an appraiser, especially a commercial appraiser, and commercial inspector, mortgage broker, whatever you're good at, you could become that involved in. One of my friends sells drapery for, and he goes into apartment buildings. Well, that's how he gets into a lot of his, and you know him, Brian. So, get into the corridor, somehow figure out how you can get into the apartment industry, and you're a step up, you're a big step up than if you're doing something totally unrelated to it, and not at all doing it and just reading books, because you learn a lot from books, but you don't learn it all. Quite frankly, you'll never learn it all. But the more you can get, ingrained into the industry, the better. So get in the corridor. That's number one for sure. So
the other benefit, that I find is, as opposed to having a job that's completely unrelated, I can be day-to-day involved in real estate and kind of keep my, ear to the ground about what's the market like, what are vacancies like, all these different aspects of the market. And it's part of my day-to-day job anyways, even though, I don't own the apartment building itself. So it just really helps you stay tuned to what's going on.
Yeah, absolutely. Anytime you can get involved in it, anytime you can add to what you already are doing, that's great. I mean, if you've got a full-time job and you need to keep that, and it's not related to real estate, then do one of the other steps that I just talked about. Mm-hmm. So John, where can people find? We're going to post this article.
Post it on LinkedIn on your profile, and we'll put a link in the show notes to it as well.
Okay, cool.
And so basically, you've written out all these different points in a little bit more detail, and it's going to be in an article so you can read through it. So, and then feel free to comment on it and add your own 2 cents or ask some questions so that we can dive deeper into it in the following episodes.
So in the following, then we'll dig more into different ways and how to get started, and we'll go into more detail on how do you buy an apartment building. I think we'll talk a lot about different strategies and broker relationships and all that kind of stuff. We'll talk about inspections. We'll talk about pros and cons. We'll talk about syndication in more detail. Talk about financing, all that kind of stuff. So we'll try to dive in and cover as many questions as we can and help people out. So
sounds great.
Cool, man. Well, thanks for being on the show, and I'll talk to you next week. And it's Hump Day Hustle. Make every day a Saturday, man.
Sounds good.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.